All right, this is Bloomberg News, and I'm Lori Rothman. We're going to zero in on commodities. Natural gas, in particular, futures today down. Lowest point in more than 5 months. Drop occurring after inventory shrank less than forecast. Joining us now by telephone to discuss energy prices and all, Stephen Schork, who is author of the Schork Report. Stephen, thanks for joining us today. What the heck is going on with natural gas right now, down about 5%?
Oh, right, and we haven't hit zero yet, Lori, so I'm pretty confident that is going to be the low at this point. But in between now, which natural gas is trading just over $4 and zero, you know what? It's no limit at this point.
All right, maybe this is a stupid question, but how can natural gas hit zero?
I was being a little silly there, but we are now getting down, Lori, into a key area of technical support. There's a gap that was opened on natural gas at the beginning of the winter in between 423 and 403.50. Now we got down to within 2 cents of closing that gap, 403.50. Now we're bouncing off of it, but that 403.50 is key, Lori. The technicals, the bears are going to want to close that gap. The next level below that, Lori, is 401.80, just about 2 cents below the gap. That is the 62% retracement area based on a ratio scale. That is a significant area. If the bears cannot hold this area, basically if they cannot hold $4, then look up, put your hard hat on, Lori, and look up falling prices, because natural gas, it's been off, and we've been selling hard ever since we hit $6 in January, and we could go a lot lower, below $4 if support doesn't hold.
Okay, and right
here.
now, Stephen, we're at 409.5 on that natural gas.
Yeah, we're at make or break it point right now.
So what's the fundamental story? Are we just awash in supply?
It's an amazing fundamental story, because we withdrew this winter on average over 22 billion cubic feet per day of natural gas. That is off the charts as far as winter demand is concerned. Obviously, this was a very cold, very snowy winter, so that's not a shock. What is a shock, though, Lori, is that we did not get any sort of knock-on with natural gas prices. As I said, we peaked in the first week of January just over $6. Now we're trying to defend $4. We're going into the spring. Air conditioning demand is muted right now. There is no heating demand, so demand is very low. Commercial, industrial demand is suspect, so the bears are piling on right now.
Let's move on to oil. Not as dramatic of a story today, but a decline by 0.5% nonetheless, 82.47. We had some inventory data recently, stockpiles increasing, plus you've got that stronger dollar. So again, this your recipe for selling oil right now?
No, I am a bullish agnostic when it comes to oil, Lori. I don't believe in the fundamentals. I think they are as bearish as all get out, but I'm not going to step in front of this runaway train. The same way why I don't want to buy natural gas right now, I don't want to sell crude oil right now. And we're seeing this now in the relationship. Typically, Lori, there's a 1 to 6 BTU ratio between natural gas and crude oil. Crude oil now, on an equivalent heat value basis, is trading at approximately 240% to the value of natural gas.
Okay, we're running out of time, Stephen.
Yeah.
Sorry to interrupt you. So crude oil, where is it going to hover this summer?
Unfortunately, right now, we're probably looking at best case scenario, low 70s, worst case scenario, high 90s.